Hey guys, my name is Brie, and in this video we're talking about the TFSA and why it is one of the best investment accounts in Canada. I'll also be walking you through the process of setting up your TFSA so you can get investing and start saving on taxes. The TFSA stands for Tax-Free Savings Account, and that is a bit of a misnomer because it's not actually a savings account. What it is an investment account. Now, you technically could use it as a savings account by just putting money in it, but the power of a TFSA in saving you taxes lies in using it as an investment account. And because of the name and because this is a bit confusing to most Canadians, a lot of them are not using it properly and are throwing away their ability to earn tax-free money. We don't want that to be you, so keep on watching and we'll make sure you know the ins and outs of this very powerful, very special account. So first things first, how does a TFSA work? The best way to think about this is to think about your TFSA as a basket that can hold various different financial instruments, and that includes stocks and bonds, ETFs, GICs, and REITs, as well as plain old cash. The money and investments you put into your TFSA are already taxed, but any gains on those investments that you make while they're in your TFSA account, you do not get taxed on those. So let me give you an example. Say you're 20 years old and you put 10K worth of investments into your TFSA. You're a good investor, so you leave it there long term, and after 10 years, say your investment has grown to be worth $15,000. And say then at the age of 30, you want to take that $15,000 out of your account. When you were 20 and you put that $10,000 in, you already paid taxes on that in the year you earned it when you're 20 years old. But say you want to take this out when you're 30 and it has grown to 15K, when you take the 15K out, you're not getting taxed on that again, even though it's grown an extra 5K. You're not getting taxed on the extra 5K that your investment made. That's pretty amazing, right? This works a little differently than the RRSP, which is what more people are familiar with. With an RRSP, you do not get taxed on the money that you put in. So if you're 20 and you put in $10,000, you're not paying taxes on those $10,000 worth of earnings when you deposit it in that account. But in the future, when you're 65, you're retired, you want to take that money out and use it to live on. That is when you're getting taxed on that money and any gains that it earns. The idea behind this is that once you are retired and you're not working, you're earning less, so you're going to be in a lower tax bracket when you get there than you would if you were taxed on the income right now when you were in your prime and earning at the top of your game. So at this point, you might be thinking, okay, if money put into a TFSA is tax-free, why doesn't everybody put in all of their money and investments into a TFSA and avoid all of those taxes completely? And unfortunately, the government has thought of that and they want their tax revenue. So they have put a limit on how much you can contribute to your TFSA every single year. This is what is known as your TFSA contribution room, and you can look up what that value is for the current year on the Government of Canada website, or simply log into your CRA My Account and it'll show you how much contribution room you have. In 2021, the contribution room is $6,000, and the cumulative, as long as you were 18 or older in 2009 when the program began, is $75,500. Now, the TFSA contribution room is cumulative. So if you were 18 plus in 2009 when this started and you have never contributed to your TFSA, you have the full contribution room available to you, including all of those years between when you turned 18 and now. So I was over 18 in 2009, and if I was opening my very first TFSA today and I had never contributed to it before, my contribution room would be at full $75,500. So I could go in tomorrow and contribute that amount of money into that account. And that brings us to, how do you open up a TFSA account and how exactly do you put investments inside it? This is definitely a stage that trips people up because there are so many different places you can actually open a TFSA, including your regular banking establishment. This confused the hell out of me when I was getting started because I simply saw a TFSA account available at my bank, so I opened one and I put money in it. And if you don't know how to use it, it can simply function as a regular savings account, which doesn't really give you any benefits. And you can actually open a multiple TFSA accounts. But even if you open 5 TFSA accounts, the contribution room stays the same and applies across all of them. So if you have 6,000 contribution room left this year, it doesn't matter if that's put into one account or spread across multiples. So When it comes to opening your TFSA account, you want to do this wherever you plan on investing. I ended up opening a TFSA with WealthSimple Trade so I can easily buy stocks and ETFs and stick them straight into my TFSA account. But you can open one with other brokers, with Questrade, or even your own bank. So let me just grab my phone and I'll show you. The process is super simple to get this set up on WealthSimple. So go to the App Store on your phone, download WealthSimple Trade, and open that up. It'll walk you through the process of signing up and setting up an account and connecting them with your bank account so you can fund your account. But once you do that, you want to go here to your main screen inside the WealthSimple app, and at the top here it says View Account. So I'm going to go there and you can see there's a personal, crypto, and TFSA account. So I have already created a TFSA account and started investing with it. But if you haven't done that yet, you can click the person button in the top left, go to Accounts, and it'll show you the different options of accounts you can create. You choose the account you want to create, choose the TFSA, and follow the prompts and steps to complete creating your account. It shouldn't take more than a couple of minutes, but once you do that, you can start investing. So next, to fund that account so you can start buying stocks or ETFs or whatever it is you're looking to add, go to Funding, Add Funds, choose your TFSA account, and then choose the amount you want to transfer over. Right now, WealthSimple allows you to transfer $250 instantly. If you want to transfer over more than that, it does take 3 to 5 business days for it to show up in your account. But that is how you fund your account. And once you are ready to go, let's go back here to the main page, and we want to find some stocks to invest in. So go on over here to the search, and you can go and browse different stocks in the top lists, or use the search bar to search specific stocks or ETFs that you want to invest in. Click on the one that you want to invest in, buy, go through the process, choose how many stocks you want to buy, and you've done it. You've added an investment to your TFSA account. If you want to give WealthSimple Trade a try, you can click the link in the description below to sign up for your WealthSimple Trade account, create your TFSA, and start investing. It's really simple. It's super beginner friendly, very easy to use, and I personally love it. And so it's got my recommendation. When you use my link, you'll receive 2 free stocks valued at up to $4,500 when you sign up and fund your account. So it's just a great way to kickstart your investing journey and get a bit of free money to get you going. So at this point, we know there's a limit to how much you can put into your TFSA every year. But what happens when you take it out? Now, you can take money out of your TFSA whenever you want, but there are a few things to keep in mind. Let me explain. Right now, it's the middle of July 2021, and say I wanted to sell $1,000 worth of one of the stocks I have in my TFSA. When you sell or take money out of your TFSA, you do get the contribution room back, but you don't get it back until January 1st of the next year. So right now is July, it's the middle of July 2021. If I took out $1,000 from my TFSA, I wouldn't get that extra contribution room back until January 1st, 2022. So this is something to keep in mind. It's not a great place for investments if you're gonna be day trading or putting money in and taking it out. This is great for long-term investing, but you will lose contribution room until the end of the year when that limit resets. In a nutshell, that is how the TFSA works. It has so many benefits. It's such a great, important part of your investing strategy, as in your tax strategy as a Canadian, but there are a few cons. There are a few situations when it doesn't really make much sense to use. The first thing to keep in mind is that there are penalties if you over-contribute. However much excess you over-contribute to your TFSA, that gets penalized at 1% per month that you have it in that account. So say I over-contributed by $2,000 over a year. Every month that I had $2,000 extra in that account, I'm paying a penalty of $20 each and every month that's in there. So say I had it in for a whole year, I am paying $240 in penalties because of that. So for that reason, it's important to make sure you're not over-contributing, you're not going over that limit, and to keep things within the rules. You'll also run into problems with the TFSA if the investments that you sell have gone down in value. So say your $5,000 investment went down to $1,000 and you sold, you've now permanently lost $4,000 of contribution room. That's never coming back. On top of this, you also cannot claim capital losses and use them against your taxes. So for both of these reasons, TFSAs are not a good place for risky investments. I personally use my TFSA to invest in ETFs and index funds that track the market. So these are very safe and unlikely to drop significantly in value. So I won't be selling off any losses anytime soon. And the third con of TFSAs is there are often withholding taxes for holding foreign investments. There's nothing to worry about here if you're simply investing in Canadian stocks, ETFs, investments that are held on the market in Canadian dollars. But say you're interested in buying Tesla stocks, which are denominated in USD. Many governments, including the United States, applies a withholding tax on foreigners who receive income through their investments from their country. This doesn't apply to all kinds of stocks. So for example, US stocks held in a TFSA are subject to a 15% withholding tax for any dividend income earned on those investments. The withholding taxes depend based on country, so it's something to keep in mind if you are planning on investing in foreign investments. So that's basically it. That is a TFSA in a nutshell. Using your TFSA strategically to hold your investments and save on taxes is one of the best strategies. It's one of the best tools we have as Canadians to help us build our wealth. So what do you guys think? Do you have a TFSA already? Have you been using it properly? What are you investing in? What are you putting in your TFSA basket and letting it grow over time? I'd love to know what you guys are doing, so share your experiences in a comment below. Remember, you can get up and running with your TFSA with your investment account by signing up with Wealthsimple Trade, which you can sign up for free at the link in the description below. And again, as I mentioned before, when you sign up and fund your account, you'll get 2 free stocks valued at up to $4,500 added into your trading account. But that is it for me for today. So thank you guys so much for watching. If you like this video, please give me that thumbs up, hit subscribe, share it with a friend. And if you want to learn more about making money, starting a business, growing your wealth, then make sure to check out one of these videos next. And I will see you guys next time.